Okay, let's talk about how to create a vision. The way I create a vision is pretty simple. We're going to do this tonight. Actually, we're going to edit what I created. I'm not going to make you do this absolutely from scratch. But I suspect with this many people, you couldn't make a decision about whether we should have a break or not. Let alone what we do on the break. Okay, vision has a time component, and I believe it has a growth component. All graphs go from right to left, or from left to right, top to bottom. Higher is better, to the right is further out in time. Somewhere you've got this 5-year goal out there. And you have a path. It will not be a straight path. It will be a crooked path. So maybe at the end of 1 year, you have a positive cash flow. That's really important. You'd like to have that. Maybe at the second year, you're going to buy new equipment. You've got some things you're going to do. The third year, you're going to reinvest some money or do something. Fourth year, you might add more education. So at the fifth year, you've got your 2x growth over the 5 years. You're doing well. You also want to talk about, these are measurable things that you can actually be doing. You also want to focus on, what are you going to do during that period of time?
I like that part in your chart where you go back in time and make more money.
That works. It works well.
Yeah.
Sometimes that's called creative accounting. So you focus on, and you just build these little pieces. You don't have to do much more than that, and you've got basically a vision. You can do that in a few seconds. You just sketch it out. It's not right. You will change this as you think about it. But the plan is iterative. You start with very simple, get it down, and as you think about it and add more to it, it grows. If you try to do it all at once, it's like eating a cubic foot of chocolate. A cubic foot of chocolate is intimidating. Only for the most part of you people. But you take a cubic foot of M&Ms, small little bite-sized pieces, and you can get through that cubic foot pretty quick. And everybody will grab a little handful, and it disappears quickly. So it's about working in little pieces and continuing growing. The self-assessment part's easy. You just create lists of what you're good at, and lists of what scares the heck out of you. You're going to take that list, and you're going to say, well, what am I going to do about it? It's that simple. Resource allocation, lifeblood. You're going to start through that. You think about where you're going to, you start with money. Money is the capital. It's capital in our business, and you've got to go spend it. You're wanting to do stuff, but you're going to have to spend it on other parts of, not on actual trades. So you're going to spend it on your human resources, which is your labor force, your capital, which is the raw business, equipment, and I could have used education here. I used education. I changed the words around. So you need a kind of a plan. You probably need to allocate these funds in some kind of percentage-wise, which breaks this down into cash. We're going to do this tonight. You're going to turn a high-level money management. An example of that might be that every quarter or so, you're going to reallocate your capital of trading. You're going to roll some of that off to reinvest or equipment and such. But you're really thinking about, this is really portfolio management. Because your individual manufacturing lines are talking about a particular strategy, and that has its own money management rules. Like any trade you can trade, we can hedge that in any fashion we want. But when you have 3 or 4 different trades, now you also have to think about a broader piece of money management, which is the portfolio money management. And Rob talked about some of that last month. So you need something about it. I'm going to tell you that this is your business. You need to pay yourself. Now you can pay yourself in real money, or you can make up phony money. It's your plan, it's your money. But because it's a business, you can give yourself a loan. But you want to pay yourself. so that you have a way of measuring your contribution. Otherwise, you're going to get frustrated along the way. So, equipment, this is pretty basic, pretty forward. So, you need to think about what you need, what you want. You may start with some, but you've got to pay for this somewhere. Either you've already paid for it, as you move it into your business, you still have to, it accounts for a certain value. So it's part of your capitalization. Education plan. I don't think we need to talk much about that. You can't do it without education. This is education. You need to allocate time and money for education. Sooner or later, you're going to pay for a big class or something, but you probably won't need to see, how does that fit with your total business? And do you have it, if you have fixed income or a fixed amount of resources, you can't spend it all on day one on education. And education is something you want to phase out, at least I believe. Now these are my opinions, and many of you may have other opinions. I think you phase it out and you learn, you buy the education you need as you learn where you need, where you're weak and where you want to grow that. And of course your education must fit within your resource allocation. So, I'm going to skip through this pretty quick. Do not forget to include SVOG in your funding for education. Okay, just did not want to miss that. Let's talk about research and development. Research and development is an entirely different view of the world. We were making high-level decisions a few minutes ago. We're in a manager's hat. Now we've got a white lab coat. We're a different person. Whole different thought pattern. But here's where you're doing the meat of figuring out how does the strategy work and what do you want to do for that. We're not going to spend a lot of time on this area tonight, because what we're going to do is we're going to develop this over the course of the next year. Some of us will be outside. We'll work on that. I think of it in terms of development. I spend a lot of my time there validating different strategies, because you got to find out if it really works for you, not just because it works for someone else, or you create it from scratch. And so validation is key. I believe in prototyping. I believe that you start small. As you begin to try to develop something, you begin to put onesie, twosie trades on until you do that. You don't start with 10 or 20 contracts, even though you may have the funding to do that, because you don't really know. So you ramp up like any other manufacturing or major production line. Every company starts with a prototype. They see whether or not they figure out what they don't know about when they actually run it for real. And then you can fix it. You develop tools, you build tools. That's all over in this area, wearing this hat. You think about markets. So we're going to talk about probably the most controversial piece of all this is the manufacturing or the trading plans, if you like. I believe it's a written document that describes how a set of trades are managed as a strategy and must include as the bare minimum what type of performance can be expected, what market conditions are favorable for it, how to set it up and manage the strategy, and clearly, I repeat again, what I consider very, very important, the validation. Essentially, the manufacturing plan has to answer 3 questions to your satisfaction. My manufacturing plan may have a lot of detail in it. Yours may have 3 lines. If that's all it takes for you to do that, I would suggest yours has a smaller probability of success. But just because I have a lot of detail does not necessarily mean I have a higher probability of success either. There's a balance in there somewhere. So you've got to answer, what does it do? Because here's where you've got to know what you want to do with it. Why would you use it? When's it appropriate to use this? So, for example, maybe you're going to be doing condors, which is a sideways strategy. It's good for marketplaces when the market's moving sideways. It's fundamentally an income type strategy. You need to know, the other fundamental questions you need to know is how much money does it take to run this strategy? What is your experience for drawdown? No strategy works. How do you know when it's failing? So you need to do that. You need to answer the question, how do I instrument it? How do I bring it up? What things do I do in order to set up the right screens, and what do I watch so I can monitor and trade it? That's setup. That's install the pilot line and then run the pilot line. You need to think about the question. At least the answer I need to answer is, what's the money management rules? How do I actually operate and run this and know I'm successful? What kind of data do I need to collect in order to meet the other characteristics? So we will develop some over the course of time. We will do that. We may develop a very simple one tonight, and it will not have all the pieces, but we'll go back and redevelop those pieces. And really key, the reason I build the pyramid with a solid base at the bottom is the validation. Because if you don't trust the plan, if you can't really, really trust it, you won't operate the way it is. You may design a set of rules, but you won't trade those set of rules, because you'll come up and say, this time is different. And as soon as you do that, all the testing or whatever you did, set of rules goes out the window. Because now it's just a one-up trade. So validation is important. But validation means something different to everyone. So we're going to quickly bridge through this. This is going slower than I thought. It's operations, but it's going to go faster now. Operations is where we actually do the work. We set up the plans. We set up the guidelines. Here's where we actually go to the classes, actually put on the trades according to the rules. So that was easy, because there's not a lot of thought or creativity that you do in the operations and manufacturing. You've already set those things up. You're just going through the process of executing that. That's really the kind of the fun part. A little bit boring to some extent.
That's where your record keeping is. In the operations.
Well,
No, it's in control.
well, that's a good question. And what's really most important about that question is, you can move any of these pieces to any part you want. It's your model. And they're all interlocked in a sense. So sometimes I put those in different places when I talk about it. But you've got it in the manufacturing and operations area, you at least have to collect the data. For my model, I would put in business controls. You actually do the report over in business controls. So you collect data on stuff, and you do that. And it's somewhere in there. These are not as solid a lines as I have them. It's mushy. But if you go try and get it out of one of the big books, you've got a paragraph or a chapter on every one of these little topics. And you'll spend the 4 years going and doing the MBA. And that's an awful lot of effort. We're cutting this short. So what we're doing in business controls is, and I'm going to spend a little more time here than any other place, because most of the other literature out there, they'll talk about back testing, forward testing, all the other stuff. But most people don't talk about really the business controls in the literature. Very few books actually talk about that. But this is where you measure the business. This is where you figure out, am I really achieving the things that I want to do? So I like to think that you build a financial plan. I'm going to show you how to do that. Monthly for 1 to 2 years by month. Usually 2 more years by quarter, because you're guessing even more, and you're really just extrapolating out. And the last year you just wing out there and say, here, essentially you're just going to get better and better. And that's the way all companies do it. Now, for our case, we're going to really do 1 year by month, and then we're just kind of wing by year for the next 4 years. We're going to take the fast path. The typical reports you do, if you go to any financial report, SVOG creates these same reports in our financial annual report. Cash flow, really important. Profit and loss, you hear that word a lot, and balance sheet. For the sake of the rest of the night, we're actually going to focus on cash flow and the balance sheet. Profit and loss we'll work on later. So rather than try to delve down and teach that, we're just going to go do it. So I see that if I stay online, we're going to do this next exercise in 8 minutes. Took me long to get through that. Okay, we got to have a vision. Well, first of all, I got to have a name. So someone needs to take notes for me.
Trading,
What is the name of our business?
trading, trading Inc.
Trading Inc.
That's I-N-K.
Incorporated?
Okay, who wrote it down? Who is my scribe for the night? Rob?
All right.
Okay, our business name, I will go change the charts in the future from Big Head to Trading Inc. I'm going to propose that we basically define our business process. You know, when I point to the screen here, it works great for me, but probably not so good for the rest of you. So, we're going to define our process. I pose that by the first quarter, we kind of launched one manufacturing line, kind of it started slow. And the second quarter of this year, we kind of launched a second manufacturing line. If we do that, you don't want to get too many things going on at once. As we learn this, we'll do some backfilling. We kind of launch a third line, a manufacturing line if we want. Maybe there's a fourth line, which is a hedging type of strategy. And kind of out here, at the end of the year, we ought to have a positive cash flow. And maybe doubled our money. I don't know if that's a good plan. How do you guys want to change it? I mean, people. Women. So, is this the kind of plan you'd like to have for what we're going to do over the year? Or do you want something different? You have 2 minutes to decide.
It's perfect.
We have 12 votes for perfect. Okay, understand, you're going to get this chart. I expect you to throw up all over this between now and next month. I expect you to go back and say, how do you really want it? Because it's iterative. This is the first step. It's not expected to be right. It's merely something down that says, we're going to grow something over time. Well, that was good. Maybe if I do this button. Oh, I've got to add the time. Okay. Now we're through this portion of the presentation.